How's it going, everybody? And welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy setup and our number one sell setup of the day. Now, the past few days have been pretty crazy in the markets. There's been a lot of volatility, a lot of selling off, but we have a few Forex pairs here that are showing some pretty good setups, so we're going to take a look at those. But before we get into that, we have some updated COT data that we can go over. So let's start off with that. Here is our COT net positioning page. This is showing us what percentage either long or short institutional traders or COT traders, what percentage long or short they are on all of these different assets that we're tracking here in the Edge Finder, with the most short over here on the left and the most long over here on the right. And just by taking a look at this, the first thing I notice is that the Japanese yen is no longer in our bottom three. For the past few weeks, anytime I would record one of these videos and check out COT data, the Canadian dollar, the Swiss franc, and the Japanese yen were by far the most shorted assets from COT traders, but bonds, the US 10-year Treasury yield bonds, has actually entered into the bottom three here at 73.37% of open contracts from COT traders short on the US 10-year Treasury. So the Canadian dollar is still the most short, though, at 90.26%, and the Swiss franc at 84.83% right behind it. On the other side, we can take a look at our most long assets. It is still gold and oil. These have been the top two for a few weeks now. Gold sitting at 82.44% long and oil at 81.82. So very close between these two. Followed again pretty closely by silver at 78.6, and then the most long currency is actually the pound right now. 75.36% of open long positions, of open pound positions, are to the long side. The US dollar here is making its way back up just a little bit higher, 69.72% long here. The US dollar for a few weeks was kind of sitting right in the middle, right around 50-50, but over the last 2 or 3 weeks has gotten a little bit of bullish momentum behind it, and it is a little bit longer than it was last week. We can actually take a look at the latest weekly change so we can see how things have shifted from last week to this week, and the Russell is the overall most bullish net change. We see 5.45% net change here from the Russell when it comes to institutional traders' positions. We can actually take a look at the amount of long contracts added or taken away and the amount of short contracts either added or taken away. So on the Russell from last week to this week, we see 6,299 new open long contracts on the Russell, whereas 16,799 short contracts were closed on the Russell, making it our most positive net change percentage of the week. We also see the Japanese yen here. I mentioned that the Japanese yen is no longer in the bottom three, and it's not necessarily because we had a lot of long contracts open. You can see that the total overall amount of long contracts open ended up just being 626, but look at how many short contracts were closed. We see 33,022 short contracts closed on the Japanese yen here. Our most bearish or most short net change was the New Zealand dollar this week. We saw 2,908 long contracts closed on the New Zealand dollar from last week to this week, and 13,014 short contracts were opened on the New Zealand dollar. So that's quickly how you how you read this latest weekly COT filing chart. I really enjoy seeing how COT sentiment changes week by week on all of these different assets. I think it's a really important thing to keep up with. So if you want to pause the video and take a closer look at that, feel free to do so. But I'm going to go ahead and move on into retail positioning so we can see what day traders have been up to. Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today. So we're going to start like we normally do with major currency pairs first. And right now, this may be because of all of the volatility that we've seen this week. There's not a whole lot of direction one way or the other when it comes to most of our US dollar pairs. We see that most of them are sitting just kind of around 50-50. Nobody really knows where these are going. We see the Aussie dollar cross here at 57% long. You know, you could argue that it's favored on the long side, but really it's just too close to 50-50. And we see the exact same thing on USD CAD with 57% short here. Again, you could argue that it's favored on the short side, but 7% favored to the short side, you know, it's really not that much. So we consider that to be a neutral bias. We don't consider anything scored either bullish or bearish biased unless it is clearly and obviously trending in one direction, which means that it's up above 60% either on the long side or on the short side. So we see USD CHF here with 67% of day traders right now long USD CHF. That is giving us a bearish indicator. And Euro USD, 64% of open retail trader positions on Euro USD are short positions. That is giving us a bullish indicator there. Let's check out minor currency pairs next. So there we go. We have this big list here. All of these assets here, all of these currency pairs are favored over 60% on the long side. That is giving us a bearish indication. And all of these currency pairs here are favored over 60% on the short side. That is giving us a bullish indication there. We can finish up with indices. We're going to add metals, crypto, and commodities here. Take a look at the rest of the list. And when it comes to everything but currency pairs, the market is really long, pretty much everything. We see Ethereum, oil, iron, the DAX, Bitcoin, copper, platinum, silver, the Russell, the Dow, the Nikkei, and the NASDAQ all favored up above 60% on the long side from day traders. Now, that doesn't necessarily mean that, you know, just because we're giving it a bearish indicator here means that it should be, you know, a bearish chart overall. This is just one of many, many metrics that we score to give overall biases on all of the assets that we're tracking in the Edge Finder. And typically the crowd overall is wrong, you know, which is why we give it a contrarian signal here. So if something is really, really heavily favored by the crowd on the long side, we are looking for bearish positions on it. But that doesn't mean that just because the crowd is long means that it has to be a bearish chart or anything like that. S&P 500, however, is the one lone shorted asset on this entire list. 67% short there on the S&P 500. That is giving us a bullish indicator there. Let's head on into top setups, and I'm going to remove any neutral biases that we may have. And there we go. So we actually see one very bullish bias, and it is the US 10-year Treasury yield bonds. And we see two very bearish biases, CAD yen and USD yen. Now, I'm probably not going to talk about bonds here, so we can talk about gold with a bullish +8 score here. I know that you guys really enjoy whenever we cover gold. And we'll take a look at USD JPY as well. We'll throw a US dollar currency pair in there as well. So we'll take a look at gold with a bullish +8 bias and USD JPY with a very bearish -11 bias. So here we are in the gold page. We have a bullish bias score of +7. COT data is a 0 or neutral score, and the retail sentiment is a score of -1. Taking a look at COT data, we know that gold is the most long asset when it comes to COT traders right now at 82%, but the weekly change on gold was actually negative. So when we're taking a look at currency pairs, for example, USD JPY, we compare the USD COT score and weekly change to the Japanese yen COT score and weekly change, and we get the overall COT data score from comparing those two assets against each other. But when it comes to gold, we're just looking at one thing. We're just looking at COT traders' opinion on gold, and right now they have a overall long bias on gold, but the weekly change was negative, so those two are canceling out, and that's why it's giving us a 0 score there. Retail sentiment, however, is a score of -1, and we can see that overall retail traders, 72% of retail traders right now are long gold, and that again is giving us a bearish indicator there. Seasonality is a score of +2. We can see that over the last 10 years averaged together in the month of August, gold typically does trade higher. Our trend reading is also a score of +2. And to take a look at the actual gold price chart, we can take a look at price forecast and pull up the daily chart for gold. So I'm going to look for XAU USD, or I can search it if I don't see it right away. So I'll just search it. XAU, actually we're looking for gold, not XAU. Yep, gold. And there we go. So gold, like a lot of markets early on this week, had a bit of a pullback. It fell for a little bit, but from yesterday to today has popped up higher, and price forecast is predicting that it's going to continue to do so. We can finish up with our fundamental data. We see here that we have a GDP score of -1, a manufacturing PMI score of +1, a services PMI score of 0, retail sales -1, inflation +2, employment change, unemployment rate, and interest rates all scores of +1. Now, when we're taking a look at this economic data, we are really looking at XAU USD. So this is all US dollar data. This is all US economic data here, XAU USD. So we see that in the US, the GDP forecast was 2%. It actually came out at 2.8%. The manufacturing PMI forecast was 48.5. It came out at 46.8. The services PMI forecast, it met that expectation at 51.4. Retail sales was forecasted to drop at -0.3, but it actually just came out at 0. The inflation forecast was for 3.3%. The current inflation rate is at 3. Core CPI forecasted at 0.2, came out at 0.1. And we can see the NFP forecast, this was a big one, forecasted at 179,000. It only came out at 114,000. And the unemployment rate that was forecasted to remain unchanged at 4.1% ticked up to 4.3%. That was a big deal on Friday with the NFP release. But there we go. There is all of the data and numbers backing up that +7 bullish bias here on gold. Now let's head on over to our top sell of the week, which is going to be USD JPY with a -11 very bearish bias. So COT data is a score of -2 and retail sentiment is 0 or neutral. We can see that overall COT traders are favored long on the US dollar, 69%, and favored short on the Japanese yen at 68%. The overall weekly change for the dollar was negative, and the overall weekly change for the yen was actually positive. Retail traders are basically 50-50 right now, 51% long, 49% short. Seasonality is a score of -1. We can see over the last 10 years averaged together in the month of August, typically USD JPY does trade lower. Our trend reading right now is a score of -2, and we'll head back into price forecast to take a look at the daily chart for USD JPY. And there we go. We can see that ever since the end of July into August, this thing has consistently moved lower and lower. It has pulled up just a little bit over the last 2 days, but price forecast is predicting that this thing sees more downside in the next couple of days. We'll finish up with our fundamental data. We see a GDP score of +1, manufacturing PMI score of 0, a services PMI score of -1, retail sales are 0, inflation is -1, employment change and unemployment rate both -2, and interest rates are a -1 score. Now, when we're taking a look at this economic data, because we are comparing two currencies against each other, we have GDPA, that is the first currency listed, so that it's going to be the US dollar, and GDPB is going to be the second currency pair listed, that is going to be the Japanese yen. Now, again, when we're doing these currency breakdowns, we have all of the, in-depth fundamental data here in our fundamental tabs here. If you want more in-depth fundamental data, you can take a look through all of these tabs. If you have access to the Edge Finder, that's going to show you the actual GDP scores, forecast, all of that stuff back, for months and months, sometimes years of data. But in these simple data scanner pages, we try and make it really quick and simple and easy to understand so that you can look at it really quick and get the information that you need to know. So basically all you see here is that GDPA, that is the US dollar, it beat the GDP expectations, which means it came out higher than what was forecasted. We saw that when we were taking a look at gold. We saw that the GDP forecast, I forget exactly what the number was, but that it actually came out higher than expected. So it beat expectations, whereas in Japan, it just met expectations. Both manufacturing PMI in the US and in Japan missed expectations. Services PMI met in the US but was a beat in Japan. Retail sales for both the US and Japan were both beats. Both came out higher than forecasted. CPI in the US, we see CPI A here, we saw was forecasted at 3.1%. It came out at 3. And in Japan, CPI forecasted at 2.8%, and it came out unchanged at 2.8%. NFP forecast, we already saw this for the US. It came out much lower than expected, and the unemployment forecast ticked up in the US. It actually ticked a little bit lower in Japan, forecasted at 2.6%, but came out at 2.5%. So there we go. There is all the data and numbers backing up that very bearish bias -11 score here on USD JPY. I hope you guys enjoyed the video, and if you are interested in getting access to the Edge Finder for yourself, you can find it in the links down in the description below or on our website, a1trading.com, and you can use promo code A1YT at checkout for a discount on the Edge Finder. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.